I recently received a comment asking me to compare the Lifestrategy 100 fund to the FTSE Global All Cap fund, so that's what we're going to be doing here today. If you've never heard of the Lifestrategy fund, and I have made a video about them all before, so do check out that video if you're interested. But essentially, they are Vanguard's own funds, and there are 5 of them. And they just differ basically in their weightings and allocations towards equity and towards bonds. So for example, there's the 20% Lifestrategy fund, which is 20% equity and 80% bonds. But today we're focusing on the Lifestrategy 100% equity fund, which, as the name gives away, is 100% equity based. The purpose of the Lifestrategy funds and why they were created is to give an investor a really easy way to invest into just one fund if they don't really want to pick and choose different funds to make up their portfolio. There are some pros and there are some cons to both the Lifestrategy 100 and the Global All Cap, and we'll get onto them all in this video. I think the first thing to do is look at an overview, so the main differences and similarities between these two funds. And then we'll delve a little bit deeper, go onto Vanguard's website and look at how they differ in their sector, geography, and company allocation. If you know me at all by now, or you watch any of my videos that compare funds, you will know I am a sucker for a table. This table that I've made here is really simple because I wanted to actually go onto the Vanguard website to show you some real differences between these two. So the first thing is the ongoing charge. Now, Vanguard as a platform does offer some really cheap funds, and that is why many investors love them and they pride themselves on it. So no surprise, these two funds have a very low ongoing charge. The FTSE Global All Cap is at 0.23 and the Lifestrategy is just a little bit lower at 0.22. These are both really low. But you could make up your own portfolio, your own fund by selecting different ones, and it could be cheaper than this. There are ways to do that. But yeah, these are both very low and there's really not much in it. Lifestrategy trumps just by a tiny bit. Okay, the number of stocks. FTSE Global All Cap currently has 7,180 stocks, which is a lot. That is a good amount of stocks to invest in. That is going to offer you a big diversification. And if a fund has a lower amount of stocks, then it's a little bit riskier because if one of them stocks does badly, it's going to bring the whole index, the whole fund down by more. Whereas if you diversify across many stocks, depending on the weighting, of course, you're going to get a little bit more diversification and a little bit less risk. You'll notice that the Lifestrategy 100 number of stocks has been left blank here, and I'll get to that in a bit. Both of these funds are offering small, mid and large cap companies included, so that's fantastic. And they're both offering allocation towards the developed and emerging markets. They are also very similar on their risk. Vanguard rate all of their funds between 1 and 7, 7 being the most risky. And these both got a 5, which is expected for equity-based funds. This would be slightly lower if they had some bonds in there, which some of the Lifestrategy other funds actually do. So moving on, the average return of the past 5 years. Now, I worked out, and I just used the Vanguard website, this may be slightly off, but I worked out the FTSE Global All Cap 12.38% over the last 5 years as an average return. And Lifestrategy 100 just under that at 11.13. We'll get into some reasons why that may have happened, but there is a very strong possibility that it's to do with how the Lifestrategy is allocated towards different areas of the globe. Stay tuned for that, we'll get to that. It's very interesting when it comes to the Lifestrategy funds. And the last thing to discuss, just as an overview before we delve in deeper, is how much is each of these funds to buy per share. With ETFs on Vanguard, you cannot buy fractional shares. So what this means is the price that you see per share, you have to be able to put that money up front to get one of those shares. You can't put £100 if it says 200, you have to have 200. With these ones, with the index fund and the Lifestrategy fund, you can buy fractional shares. So at the moment, the Global All Cap, the price per share is 173, just over. Lifestrategy 292 basically. If you only had £50 or £150 to invest, you could invest in either one of these funds. You would just get a fractional share. So you would get the proportion of the share that you could afford with your £150. Now let's dive a little bit deeper. On the Vanguard website here, we're on the Lifestrategy 100 Equity Fund Accumulation page. This is also available, this fund, in an income share class. So that just means that the difference between whether you have your dividends automatically reinvested or not. So on this page, if we scroll down, you'll see that Vanguard have listed an objective for this fund. And I think the important thing here to note is that this fund gains exposure to shares by investing more than 90% of its assets in Vanguard passive funds that track an index. Okay, so what this is saying is that this fund is not picking individual companies to invest in. This fund is actually investing in an array of different funds. And let me show you what exactly I mean by this. So if we go to portfolio data, we can see exactly how this is broken down. So if you invest in the Lifestrategy 100 fund, you are investing actually in all of these Vanguard funds. That is why I said it's one easy, simple way to invest if you don't want to pick your portfolio yourself. Because essentially you are getting exposure to all of these Vanguard funds. Now on their website, you can also see the percentage allocated to each of these different funds that make up the Lifestrategy 100. But we will touch on that a little bit in a minute, because the way that it's allocated is a little bit interesting. It may put some people off, but yeah, stay tuned for that. So we can see here that you are essentially getting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You're getting 10 different Vanguard funds just by investing in this one fund. You're getting exposure to 10 different ones. And that's maybe interesting to some people because it's a really simple way to get exposure to these funds. If you remember, I just told you that this fund invests in different cap size companies, and it's shown here because we've got the S&P 500, which is the large cap companies of America, the biggest 500 companies. But you'll also see, if you look down, you're getting the FTSE 250, which tends to be the mid and the smaller cap companies here in the UK. So you are getting different cap sizes, but it could be that you're getting, say, all of the big Americans, but only some mid-cap companies in the UK. You have to sort of bear that in mind when investing in these Lifestrategy funds. If we take a look at the FTSE Global All Cap fund now, you will see that this fund is not investing in lots of different funds as the Lifestrategy one is. You're actually getting lots of different companies. So if we just scroll down here, we can see that here it breaks down the sectors that you're getting if you invest in this fund. So you're getting 23.4% go into the technology sector, 13.7% go into the financial sector, and so on. And then if you scroll down further, you can see exactly how that is split per company. So the largest holding in this fund is actually going to Apple, then Microsoft, then Amazon, then Alphabet, then Tesla, and so on and so forth. So you would have to know what you're actually getting from Lifestrategy, you'd have to sort of go through each of the different funds and see what their holdings are. So you'd have to look into the S&P 500, FTSE 100, FTSE 250, all of them funds that mentioned on that website. You'd have to then look into a little bit further if you really want to see the company and the sector breakdown. Let's just compare the sector allocation differences between these two funds. So on the left of the screen, we have the FTSE Global All Cap, and on the right we have the sector allocation for the Lifestrategy 100. So the first difference that I can see here is that with the Global All Cap, you are getting the biggest amount of the whole fund allocated towards the technology sector. Now, that may be a really good thing in your opinion with the technology boom that we're seeing and lots of these massive technology companies doing really well. You might actually prefer to have such a large amount dedicated towards that sector because there's perhaps lots of growth in that sector, and yeah, that might be a preference for you as an investor. If you don't like that, however, you may be more suited to the Lifestrategy fund because we can see here that actually the largest weighting is towards commodities, and you don't really start seeing, you've got software and computer services in second place, and then you've got technology in fourth place, but it's not as largely weighted as the Global All Cap is. And you can see here that actually the breakdown is very different. So let's take financials, for example. Financials in the Global All Cap, you have allocated 13.7%. So that's still quite a substantial amount. Whereas in the Lifestrategy 100, banks take only 6.19%. If you were to add in investment banking into that as well, that would be a further nearly 3%. So you could pause this video here and just look at the breakdown. What I would recommend is if you want to see more about the Lifestrategy fund, go on Hargreaves Lansdown, which is what I've done here, and you can scroll down on their overview page and it will break it down by sector and by country, which is a little bit difficult on Vanguard's website, weirdly enough. They seem to be quite simple for everything but the life strategy fund. So yeah, recommend doing that if you're having some trouble. The next thing to talk about is perhaps the most important, and that is the market allocation of each of these funds. Now, just as a quick overview, if you didn't know, the US take up most of the world's economy. So they are the biggest economy in the world. The UK take up about 4%. So we're a tiny little portion. Now, if we look on the left here at the FTSE Global All Cap, we can see that this fund has allocated 60%, by far the largest, to the US. And that probably makes sense, right? If the US is the largest economy, you probably want a fund that dedicate most of their allocation to the US. It makes sense. Perhaps you don't. Perhaps you don't really like the US market and you don't think there's going to be much growth there in the upcoming decades. So you'd want a fund that maybe doesn't allocate so much towards the US. It's really a preference thing. So you can see the Global All Cap have 60% to the US, 6.1% to Japan, and then about 4% to the UK. This makes complete sense. This is going in order of the biggest economies in the world. In terms of UK make up about 4%, and that has been demonstrated here at 3.9%. If, however, we look at the Lifestrategy 100 fund, it's completely different. Although the US have the largest allocation at 31.5%, coming in a close second with 21.5%, bearing in mind the UK are only 4%, is the UK. Now that means it's heavily weighted towards the UK market. If the UK market doesn't do very well, or does well, that will be really heavily reflected in the Lifestrategy fund performance. This could be good. Like I said, if you really back the UK market and you think we're in for a good growth period, this is fantastic. You're getting heavy weighting in the US, but you're also getting a very strong weighting in the UK. But it's something that you really need to be aware of. The Lifestrategy funds actually used to be more heavily weighted towards the UK. I believe it used to be nearly 30%, which is absolutely mental, but they seem to have lowered that now. And perhaps they'll carry on lowering it in the future, I don't know. But yeah, it's definitely something to be aware of. I used to invest in the Lifestrategy 100 fund, but I did sell out of that position and I actually instead went for the FTSE Global All Cap. And I'll just tell you my reasonings for that now. It's basically because I had a lot of overlap in my portfolio. I still do, but I had a lot of overlap. I had obviously the Lifestrategy 100 fund, which invests in all these different Vanguard funds, but I also had invested in the individual funds on Vanguard anyway. So I was almost duplicating my investing. So it didn't really make sense. And also I didn't want such a large weighting towards the UK market, given that I already had the FTSE 100 in my portfolio anyway. And that was my personal preference as to why I decided to sell the Lifestrategy 100 and go for the FTSE Global All Cap. And the FTSE Global All Cap I also really liked because of the diversification and the number of funds that you're getting. That's not to say that the Lifestrategy is bad by any means. I think they're a great set of funds. Definitely have a look into them if you're interested and watch my video about all of them before you decide which one to invest into if you do. If you're interested in seeing the FTSE Global All Cap versus the VWRL, then check out this video here.